Ladi, thank you for your time on the show. Let's start with what expectations are for today's auction, talking about subscription levels and also pricing.
Thank you for having me. The preceding auction closed at about 3.5, 4.5, and 6.5% levels, respectively, on the three tenors on offer. That's the 91, 182, and 1-year bills. Today, we have, like you said, about 154 billion being rolled over by the DMO. We expect rates to hover around where the preceding auction closed. We also expect that the subscription that we've seen in previous times will dwindle, given the current interest rates that the market has to offer.
Okay, I also understand that a good amount of maturities and liquidity coming into the market this week. Talk to us about these maturities and how soon and how much of that the CBN can mop up this week.
That's correct. So aside the 154 billion by the DMO that I mentioned, we have an OMO maturity of about 441 billion. And through the rest of the month, we have about, in addition to what's maturing tomorrow, we have about 2 trillion outstanding. We also have a bond maturity on the 13th of February 2020 of about 606 billion, an additional 50 billion on coupon payments for the 28 bond as well. So given this, we have the system being awash with liquidity, and we expect the market to react with bullish sentiments, which we haven't seen in the last couple of days.
But what about the CBN's mopping up activities? How much of that should we expect?
Okay, so we expect an OMO auction to be floated by the CBN tomorrow, primarily because of the maturity of about 441 billion, like I earlier mentioned. So the amounts that the CBN decides to float is totally up to them. But subscription levels, again, on this side has dwindled, given the restrictions of local corporates and retail investors from investing in OMO bills.
Okay, now, obviously, as you already know, we're seeing much lower, very low interest rates, very low rates rather at the fixed income market. And of course, this would definitely have implications for interest rates in the economy. Speak to us on that point, the lower interest rates that we're seeing, the implications for the economy, and also implications for government borrowing this year. I know that obviously the DMO has been trying to get funding at way much cheaper rates for the government, especially to fund the 2020 budgets. That on the one hand, but we also hear that the government is still trying to float another Eurobond soon. But just to hear your thoughts on implications for interest rates.
Okay, so for the OMO bills, we have them hovering around the 13% handle. Yield effectively is about 15%. So in terms of real returns, we have a positive carrying of about 300 basis points on this front. But nevertheless, as you mentioned, we have the NT bills trading significantly lower than this at around 4 to 5% levels on the long end of the curve in the secondary markets. Effectively, this is a negative carrying. Given where inflation is, we expect the trajectory of inflation to continue to trend upwards. So the idea is for the government to continue to borrow, well, for their cost of debt to be at the lowest level possible, which is what they've achieved since they restricted local corporates and retail investors from investing in OMO bills. So I would say they've done a pretty good job in terms of keeping rates at single digits. The question now is how long that they can hold the single interest rates for, given the slowdown in global growth, the decreasing oil prices, and of course the coronavirus that we have at hand. As you mentioned, we have the proposal by Buhari to raise a Eurobond of between $2 and $3.3 billion. So we expect rates on these to hover around the same levels where Ghana closed, at about 8% levels, excuse me. So the subscription will be, we expect it to be overwhelming, given the limited investment outlets that we have as investors in Nigeria.
Okay, we'll come back to the fixed income market. I just wanted to quickly talk about the FX market and the performance of the Naira against the dollar. We've seen some weakening, especially at the I and E window, the Naira hovering around 364 to the dollar. And interestingly, we're seeing the Naira somewhat stable at 360 at the parallel market. And I just find that to be quite interesting. But could you just share your thoughts on that?
That's correct. We saw a little bit of a depreciation in the I and E window. Rates are currently around 364.9 levels. And we've seen this trend for the past week. We've seen the CBN being the major supplier of funds in the markets. They've supplied about $386 million. So when you call around market participants, they don't necessarily have the supply to fill the volumes in the market. That's why we're seeing a bit of a disparity between the rates in the parallel markets and the INE window.
Now, with the reserves still, depreciating and oil prices not, in the 60s levels that we saw it a couple of months ago, where the government and CBN was somewhat comfortable at. Do you think investors are somewhat nervous about the ability of the central bank to continue to defend the naira? Just looking at where the reserves are right now, 37.4 billion. This was as at the 10th of February this year.
Correct. Well, the major mandates, or the number one mandate that the CBN governor has, is to keep exchange rates stable. Hence why they have consistently and continuously been interfering in the market. So they've intervened in many ways and have kept supply stable within the market. So a total, or like I said, $386 million has been sold, which represents about 44% of the total supply this year.
Okay, Ladi, final question. Back to the market. The rates we're seeing, excuse me, at the fixed income market. Now, many analysts have told me that it's artificial, and at some point, the market will find its level. I mean, is this something that traders, is this something you're discussing amongst yourself? Is this something that we could actually see happening?
I mean, in the long run, the forces of demand will obviously prevail. But as at now, we're seeing the CBN managed rates around the 13% mark, and they will continue to do so as long as they keep feeling the pressure in terms of where the reserves are. And of course, as oil prices continue to dwindle, as where we're pegged as a nation at the moment is supposed to be at about $55 a barrel, and now the price of oil has gone slightly below that.
All right, Ladi, thank you for your time today.